On Wall Street today, stocks sold off in the final hour as investors got spooked after the release of the minutes from the Federal Reserve's last policy meeting. Comments from policymakers revealed little consensus on the direction of interest rates and doubts on the Fed's timetable for tapering its stimulus measures. The Dow lost nearly 90 points. The Nasdaq fell almost 35, ending 8 days in a row of gains, and the S&P down 12 points. Over in the bond market, those Fed fears sent Treasury prices lower and yields slightly higher. The yield on the 10-year note rose to 2.74. Steve Leisman has more now on those Fed minutes and what's next for the nation's central bank under new chair Janet Yellen.
The Federal Reserve gave a hint today of what it would take for them to stop reducing the amount of bond purchases it makes, and the bar seems pretty high. In the minutes for their January meetings released today, a number of the members said they would only stop tapering, quote, if the economy deviated substantially from its expected path, and that's for stronger growth in the year ahead. And that's similar to new Fed Chair Janet Yellen's recent comments before Congress that it would take a notable change in the forecast. I asked San Francisco Fed President John Williams today whether a weak February jobs report, that would be the third one in a row, would be enough to stop the taper.
In my view, the hurdle is pretty high on changing the pace of the step downs in our purchases that we've started back in December. I think that the economy has improved quite a bit, and we again want to take this medium term look, and unemployment's down to 6.5%.
The Fed minutes show that the central bankers discussed the weather and said the weak December jobs report was likely the result of inclement weather. Meanwhile, the Fed had a robust debate about how to communicate its intentions to keep rates low for a long time. The Fed had said it could consider hiking rates once the unemployment rate fell to 6.5%. But it's already fallen to 6.6, and the Fed doesn't seem ready to move. There was also considerable concern about low inflation rates, with some officials suggesting that if it doesn't move up sometime soon, the Fed might consider halting the taper. That was the doves on the committee. The hawks on the committee, they fired a shot of their own, with some saying they could see raising interest rates even before the middle of the year. But that right now is not the consensus of the committee. For Nightly Business Report, I'm Steve Leisman.